What's going on YouTube? This video, talk about Micron Technologies. Year to date, this company is up 29.4%. Over the course of 1 year, 27.8%. We're going to go through the financials. They just reported their earnings a day or two ago, and we have some earnings to go through on this company. This company sells memory and storage products worldwide. So think of it like your SSD, your RAM. They also sell storage for smartphones and computing storage. All right, so we're going to come over here. We're going to look at all their financials based on these graphs, these charts that we have. So we have our revenue, our gross profit, net income. So all three are pretty well within tandem of each other. So they're, as they go down, they all just seem to work together. So that's good. Net income. So it's good to see that our revenues are growing and so is our net income. We don't want to see where our revenues are growing, but our net income is shrinking. That's always something to look deeper into, but we don't have to look into that right now. Net income, is the same chart, but it's just net income by itself to kind of see how that trends overall. And currently it is, pointing higher, which is always good to see. Gross margins here. So we can kind of see based on this top chart, our gross margins are all over the board. And usually these are relatively consistent. Like gross margins don't move as much as this, on most companies. So this is something that's kind of concerning because how do you, it makes it a bit tough to value a company with a gross margin that goes from 20% to 60% in 2 years and then back down to 30%, so it's like, yeah, I don't know, different. Net margin, same thing. We kind of got our net margin that, and as of lately now, this is just goes up to 2022. This is not including the trailing 12 months. So we have our net margin is negative now, and our gross margin is also well, it's not negative, but it's lowest it's ever been. Okay. And same thing with our net margins, lowest it's ever been based on these, based all the way up until 2014. Our revenue and gross profit year over year change, we can see going the wrong direction here. Net income, this is the same chart, adding net income in, and net income is also trending in the wrong direction. Our return on invested capital, again, it's going the wrong way. Cash on debt, debt is increasing. Our cash, it's starting to increase as well. So this chart is not too concerning. This is something that is unusual. I don't know. It'd be worth looking into real quick to figure out why in 2019 we almost had $50 billion, and then 2020 we went from $50 billion to $15 billion in debt. So I think that warrants a bit of a something to look deeper into as to how did we eliminate that much debt and it had zero impact on our cash. It makes you think they sold some stuff that, I don't know, something to look into. Net income to free cash flow here, guys. I mean, it's going the wrong way. It's not good here. Free cash flow, same thing. Our free cash flow just trending lower, man. Share count, our share count is slowly declining, which is typically a good thing. But when your free cash flow is negative, maybe don't buy back shares right now. Figure out how to use that free cash flow to grow the business, not just buy back shares. Our capital expenditures are exploding. We went from $250 billion, we're up to $10 billion right now. So again, something to keep an eye on. We're our CapEx is exploding and our revenue, I don't think is exploding that much. So watch out for that. And on top of it, they're paying a dividend. I don't get that. Why would you pay a dividend when you're free when I mean, I guess the last 2 years you were positive free cash flow, but not by a lot, and your CapEx is growing the last 2 years. I don't know. This is a little goofy. This isn't something that I want to see. All right, well, let's move on. So I'm gonna jump over the calculator here real quick because this company has a negative earnings per share, so they're not profitable right now. Okay, so there's only a few things for us to look at. And one of the things to look at is our multiples comparison, comparing this company to other companies and how it does in revenue and gross profit and all their margins, right? But over here on our manual PE, we can see we take our market cap plus our debt minus our cash, and then we divide that by our cash from operations. So it'll take us 15.9 years to earn our market cap. Our price to book ratio, we're sitting at right in line with our 5-year average, so nothing to be, no big red flags or anything like that there. PEG ratio, the analysts are giving us a pretty good forecast on this company to give us they're forecasting a positive PE and growth rate on this company in the future. And based on future valuation, they're telling us we are roughly around that fairly valued range currently. Then last and only valuation that's going to give us a price tag is DCF here. So we have our free cash flow from 2017 to 2020. And if we disregard every year in between, we went from $2.9 billion to $3.1 billion in 5 years. That's not a very good growth rate. Obviously, you can look at everything in between here as well and see like their free cash flow is not growing. And as we can see as of lately, it is negative. So, not looking good over here at Micron Technologies. So, currently we have a discounted cash flow price per share of $42.51. Also, just to note that analysts had a growth rate of 9%. I put in 5% because I feel like 5% to even being very generous. So, 9% I think is being very generous. So, that gives us a price tag of $42.51. So, now we're going to look at the comparisons of these companies here. So we have ADI, NXPI, MRVL, and MCHP. On Micron, we have several red flags over here on this company. I mean, just gross margin is below 15%. I mean, it's gross margin is very bad. For me, that's my what I want to see is 15% or more. Profit margin, it's negative. I mean, nobody wants to invest into something that's negative, right? I mean, why would you do that? Unless you foresee future growth in the company, then it's different. But that's opinionated. And if you think that Micron Technologies is going to be worth $200 in the future, then maybe you should look into investing into it. But I don't. Return on invested capital, negative. Operating free cash flow. We are $5.09 billion of operating free cash flow, but we have a negative net income of $2.91 billion. So we're almost doubling our cash from operations from our net income, which I don't know. Revenue growth and just growth, 5-year growth is just terrible at this company. For some reason, these numbers are not the same. I think these should be the same, but either way, we can look at these charts here. These come from the same sources. So our 5-year growth on all these companies, ADI has the highest growth. MU is showing some decent growth as well. We have our market cap to revenue on the right-hand side. In terms of market cap, second in line. Revenue, highest revenue company. Even though they're the highest revenue company, they are not making money. That is a concern. That's a very big concern. You have MCHP that has almost the lowest revenue and has the best net income. Well, in terms of revenue, gross margin. Look at this chart. I mean, MU is the first one. MU is the green one. MU is the lowest on every single one of these charts. So just based on competition here, you can already kind of tell that MU is probably should not be your decision. You should be looking at these other 4 companies. And based on these other 4 companies, I think there's only 3 of these 5 companies that should be looked at deeper. And that would be ADI, NXPI, and MCHP. These are just numbers, right? These are just things that this is what the company is doing. This is how the company's ran. And the company, in my opinion, is ran very poorly because they're paying a dividend and they're buying back shares and they're negative free cash flow. That makes no sense. So one thing I want to show you guys as well is on their most recent earnings statement here. This is the cash flow statement. So we have our negative. This is over 9 months. We have our negative net income from loss of $4.4 billion last year, $7.2 billion positive. Their depreciation and amortization of intangible assets is increasing and is throwing off their cash provided by operating activities. This is the only reason they're positive on their free cash flows. Well, not anymore, but they were, because they were showing such a large depreciation expense. Anyway, so we have our net cash provided by operating activities of $1.3 billion is what we made. We take out our CapEx, which has actually shrunk about $2.2 billion year over year, so that's good. So it's $6.2 billion. We have a negative free cash flow of $4.9 billion. These are not millions, these are in billions, by the way. So after that, we come down here. So we take our 1.3 minus our 5.3, add back in 5. It gives them a positive $1 billion to add to their current cash of 8.3. So now they have $9.37 billion of cash. So one thing here is cash flow from financing activities. So this is it just doesn't make sense to me. So you guys, they're very obviously not gonna, they're not making money. Their net income is negative, and they're planning on still paying for dividends and repurchase and buying back stock. I don't get it. I would not. I would cut those out. I know these are nominal numbers, but you, why pay them when you're not making money? Because you're issuing more debt here. They issued another $6.7 billion of debt, and they basically use that debt to pay for their dividends and their buyback shares. Like, I don't know. It doesn't make sense over here. So anyway, we're gonna look at the stock chart over here on Micron, and we can see this. There's a bit of a channel here that they're within, and right now we're sitting on the lower end of this channel here over on this side, and we have what I would consider probably a resistance point, which looks to be true on this company. It seems like we right around this $69-$70 range here. And we've rejected it several times here. I'm guessing based on financials and based on their most recent earnings report, I'm kind of shocked that this company didn't just blow through this trend line and continue lower based on their financials. Maybe it's taken a day or two for those financials to get digested, but I personally think this thing's rolling over and going lower, just unless next quarter is better for them. If they can hang in there and trend sideways for the next 3 months, and then next quarter all of a sudden things turn around dramatically in this company, or maybe this company forecasted some pretty good or this company had some pretty good forecast for themselves. I don't know. That's something else to look into. Again, this is just the numbers side of things. This is always something you should look into deeper if you find this company interesting, if you want to invest into this company. In my opinion, how I look at things, I look at the financials first. If I like the financials and like how the company's ran financially, then I think this warrants for me to look deeper into the company and see if this is something I want to personally buy. This is not a company I will be buying. I will not look any further than what we've just discussed on this video. But that's my opinion. That's what I see. Your opinion could be totally different. So if it is, I encourage you to dig deeper into this company and see if they sweet talk you and make you and you find interest in this company and want to buy it. But that's it for this video. If you found value in this video, and if this was helpful, drop a like and subscribe, and we will be back later with another stock analysis video.